Welcome to the first ever episode of Open Banking Expo TV, and a huge thanks for tuning in. It's been a busy start to the year, not least with the inauguration of the 46th President of the United States, but today we're here to talk all things future of banking in the cloud. Stats from 2020 suggested the industry was on course to invest over $500 billion globally in technology across the financial services space up until 2021. Banking in the cloud is no longer just a high-level conversation between a CIO or a CTO of a business, but the narrative now spreads throughout the entire business infrastructure. Luckily, today we're joined by industry pioneer Andrew Smith, founding member and CTO at RTGS.global. Hi, Andrew. Many thanks for joining us today.
Hi, how are you doing? Really good to be here,
Very well.
actually, again, as somebody said. But
Yeah. No, good stuff. Many thanks. Great to have you here from your virtual office. And today also sees us once again draft in Adrian Mount-Stevens, who is the subject matter expert for all things banking and payments at our partner, Equinix. Hi, once again, Adrian.
Hi, Adam. Hi, Andrew. It's great to be here again. I need to upgrade my office to include a fish tank so I can compete with Andrew's. But
we can work on that. We've got some time. Great. So I'll set the scene slightly. Banks are no strangers to disruption. Over the past 10 years, they've faced the fallout from the global financial crisis. They've seen regulatory reforms, the birth of new competitors and challenges, and now a global pandemic. So it's clear to weather the storm and build greater resilience for the future, and they must become even more instinctive than perhaps they have been over recent years. So before we dive in to the main body of the conversation, and to give those watching some insight as to your respective roles, it would be good to get an idea as to kind of your day-to-day activity at both firms. Andrew, if you can just give us a quick 30-second snapshot of your role within RTGS, that would be great.
Yeah, so I'm the CTO at RTGS. Predominantly, that means that I'm overseeing what we're building in the cloud, the infrastructure that we're trying to provide out to participating banks. RTGS is a liquidity network, and I can talk about that shortly, actually. But it actually means that we need to bring together banks across the entire globe. So a lot of my work at the moment is looking at the infrastructure of that. How do you use cloud technologies? How do we use our network connectors to essentially collapse the globe into these kind of directly connected banks' core systems, really. And the cloud's the only thing that really has allowed us to do that. So it's been an interesting couple of months. And that's my focus point, predominantly on the technology around all of that.
Great. Thanks, Andrew. I know you've been busy beavering away over the last 12 months, and it's great to have you back around and taking part in the first episode of Open Banking Expo TV. So thanks for that. And Adrian as well. It'd be great to get some insight into day-to-day life at Equinix from your perspective, please.
yeah, thanks, Adam. So I've got huge job envy now because Andrew's job sounds like such great fun. I'll try to make my job sound a little bit fun. So I'm part of our strategic business development team at Equinix. I guess part of my job is to help to grow the banking and payments customers at Equinix, and part of that, in turn, is making sure Equinix is aligned to the needs of payments and banking customers who are on some sort of digital transformation journey, from if they're established businesses, from data centers to the cloud, if they're new businesses, often in the cloud, but connecting into an ecosystem of data centered partners. So I'll try to make that sound as fun as Andrew's, but I'm suffering from huge job envy now. So
Perfect. Yeah, great. Thanks, Adrian. Sorry, go on.
I was going to say, don't get envious. It means I started at like 6 a.m. today. and this hair is all disappearing because of stress. So it's all fine.
Amazing. Many thanks, both. So interestingly, the first kind of theme we'll look at will be kind of around evolution of the market. Andrew, I'm going to come to you first. So RTGS.global is a liquidity network for banks, as you mentioned. In the past, you've said that the RTGS.global proposition just wasn't possible until now. So it'd be interesting if you can elaborate on that and tell us the importance of cloud for the platform.
Yeah, so I think just to clarify, RTGS doesn't provide liquidity to other banks. Rather, we bring those who have liquidity, the banks themselves, together so that they can swap the beneficiary ownership of that liquidity for the purpose of a transaction or something off the back of that. Now, if you think about what that means globally, that means essentially you have a bank maybe on the west coast of the US and a bank here in the UK or Europe, and you want to maybe send an instant transaction. Well, off the back of an instant transaction, you will either have some sort of pre-funding in place, but essentially it comes down to, does both banks have the liquidity to do some sort of trade to facilitate the onward leg of a transaction? So what we do is we collapse their kind of core banking systems almost into this network to bring them directly together so that we can have this messaging pinging between the two of them to swap this liquidity or initiate a liquidity transfer. That's pretty much what we call it atomic settlement. It's pretty much instant. If you initiate it from, let's say, the US, it'll be completed back to you within about 300 milliseconds. That removes a whole raft of risk associated with transactions. But what are we actually doing? We're having to use telecommunications that have a service level agreement, if you like. We're having to connect these two jurisdictions geographically together. And the way that we do that is by leveraging parts of the underlying cloud infrastructure that just wasn't there until the last 18 months. If we look at Microsoft Azure, they've invested billions in the infrastructure that gives them a private backbone. So it does mean that if we can connect to the infrastructure in the US securely and privately on Microsoft, we can then use that infrastructure and connect to a bank securely here in the UK. Now, you don't get that with any other real provider or telecommunications network. You can't do that. So that cloud infrastructure that's been invested in gives us that SLA in terms of the network messaging. It also allows us to look at things like the scalability and the implementation of the solution itself. People forget you have some real challenges in terms of scale when you talk about payments. We always think of it almost as a sales, I'm paying you, whereas actually as I'm paying you, millions of other people are making those transactions happen at the same time. So when you have something like a global network, which is a real-time settlement network, you've got to understand the scale behind that, what could actually be going on at any moment in time. So we needed to understand corridors, communications. We need to understand how you scale those elements up in the cloud, and more importantly, scale them up to meet demand and then collapse them down when you don't need that. So again, that's something that the cloud gives us. But it's really understanding that that cloud infrastructure just wasn't available in its totality, easy for me to say, entirety, until about 18 months ago. I should also just add on that this concept of availability of those cloud interfaces and the availability of the RTGS network connector, we have a principles first approach, so that we run active for your connector as a bank, but actually the jurisdiction that you're connecting to is isolated to where you are. So that bank in the US, you're only connecting to a US-based bank jurisdiction. The network effect does that under the covers between jurisdiction to jurisdiction. So having that high availability concept, as well as the SLA of telecommunications, they're the two things that we really needed to have this constantly on, constantly up, and that kind of atomic settlement piece that we could provide. And as I said, those three things weren't available 19 months ago. They have to be there all at once. You can't have one without the other.
Great. So we've discussed, you've kind of run over then some of some of the key features and the benefits there. It'd be interesting to dive into the why, and I'll come back to you first, Andrew, and then I'll flip over to you, Adrian. So we talk about the new normal where we are right now, but why do you think cloud is becoming the new normal? Like I say, Andrew, I'll come to you first, and then we'll pass the baton over to Adrian.
Yeah, I think actually, if you're a CIO or CTO like myself, where do you want to be able to get the biggest bang for your buck, if that makes sense? You want to be very effective in how you invest your money, and you want to be able to put it into your engineering efforts or the product itself, rather than underlying infrastructure, or more worryingly, trying to guess what that infrastructure may look like in 5 years' time. So a traditional model, you'd sit there and say, okay, I'm going to look at volumes and demand for my service and try and scale that out for 5 years and buy a 5 years worth block of infrastructure. You don't need to do that now, right? So straight away, your immediate go-to is, I don't want to have this long-term investment plan to kind of prove something. So you can spin stuff up very quickly. You can prove your concepts or your thinking in the cloud and then destroy it all. So you're only paying for when you actually want to use those particular services and infrastructure. So that's a massive benefit. So I think a lot of new projects or new requirements, CIOs and CTOs and stuff, they look at it and go, well, the best place to prove this is in the cloud, because I don't have to think about a larger investment. The second part is really when you look at the investment that goes into the cloud, we already touched on some of the infrastructure comments, the telecommunications behind that. The resilience, the robustness, the scalability, the performance, and what that can drive off the back of that, you can't compete as an individual bank on your own. There's just no way that you can start bringing those levels of resilience to your common infrastructure, whether it be a colo data sharing sort of environment or whether it's an on-premises. So straight away, you've got to look at, compliance is driving this thing about, you've got to be resilient. So the most resilient place is surely to deploy this into a cloud environment. And as I said, you've got the scale, you've got the flexibility and the cost implication. So it makes perfect sense that the cloud is the new norm and the go-to area for any new project or initiative that you want to build or bring into a financial institution.
Great, and let's bring Adrian into the conversation here. Then, Adrian, I'm sure there's a couple of bits and pieces you'd like to cover off here, especially from what you're seeing in the marketplace from an Equinix standpoint.
Yeah, I love the way Andrew tried to mix entirety and totality into a new word. That's the winner for me today.
All that innovation.
Engineers aren't good at English.
That's brilliant. Andrew's really summed up, a lot of the cloud benefits, and I know we're going to talk about them more. So I'll just try and add just a different view. It's obvious to me that the IT, as we know it, is on a journey towards, I guess, just call it the easy button. That Amazon website, single click. Everything needs to be easy. Everything needs to be now. And we talk about, in my team, we talk about the future of financial services as being instant, open, and everywhere. And RTGS.global business model is a great example of that. But the cloud itself and the ability to give access to technology on demand is really part of this migration of IT infrastructure from you used to build it and do it yourself, and that was everybody's business model, to really what you're going to do is through APIs and through cloud and through SaaS, you're going to partner and pick what you need and take it when you need it and consume it, and somebody else is going to own and operate it. And I think that's where we're headed, and cloud is one part of the step along that journey. And the cloud itself, as Andrew said, is evolving. It's not a static thing. The new capabilities available this year, next year will accelerate that too. But it's really about getting into a sort of global business model for every enterprise where you take what you need as a service, and cloud being one step on that journey.
That's great.
I think
Thanks.
what's also just to jump in and say, I think one of the real benefits there is that accessibility that you raised, because if you think about things like big data and deep machine learning and AI, you can't really access those without the cloud, because you just simply don't have the investment to be able to put into that, to build that level of infrastructure or those capabilities. But what's really interesting off the back of that is when you start to say, I'm going to leverage that in the cloud, I'm going to take big data, I'm going to overlay some deep machine learning, and then the output of that can really change financial services. So if I think of mortgage lending or loans, for example, you can really start to crunch the numbers in a new way to say, actually, I know that these people will be able to afford to pay back that loan, so I can pre-approve them. Therefore, you can be far more accurate in how you actually communicate with your customers without giving them false hope or anything like that, but also more accurate around your own business models. And that's just because you started to move things to the cloud, and because you're starting to take advantage of technologies that you just wouldn't have access to if the cloud wasn't there.
Yeah, Adam, let me just chime in, because I've got a point on AI, and AI is a great use case, right? And it's something that we see at Equinix with our customers in financial services. It's one of the early use cases that an established business will move to the cloud for, and that's AI. And I had to write it down because the list is so long of how many things you can potentially use AI for in financial services. But you're talking about risk, KYC, credit scoring, anti-fraud, customer segmentation, AML. Then you get into the customer care side of things, automated advice, service customization, chatbots, all of this stuff. just from one thing. And of course, no one's going to build that themselves. They're going to partner with Google are leading in this space. So you might have Google Cloud specifically for these AI capabilities, adding that onto your data, and suddenly you've got the ability to perform these amazing informed transactions and actions in front of your end customers, and obviously digitally being the future of that. But yeah.
That kind of leads us nicely, not only to the services you've just reeled off there, Adrian, but you mentioned around kind of acceleration and how the market is moving so quickly. So, Andrew, I'll come to you as we look at this kind of acceleration piece. Do you think that it means kind of more banks are starting to run core banking systems in the cloud? And if so, are we going to see the rise of kind of multi-tenanted SaaS offerings, for example?
Yeah, blunt. I think what we're going to see is we're already seeing some of the more, I'm not going to call them traditional players, but established players who provide core banking systems are starting to move to that cloud approach, that cloud first approach. It was interesting, I think, when we look back 2, 3, 4 years ago, when the cloud was a little bit more immature, we had this infrastructure that was there and being made available, and core bank providers or banking technology providers would say, we're cloud enabled, or this is cloud ready. And basically what they meant was you can deploy the same stuff on-prem in the cloud. We've got that working and we've proved that out and we'll support it. I think what we're starting to see now is an evolution of those particular providers and technologies to say, actually, we weren't taking advantage of any of the infrastructure or the concepts or the architectural concepts of the cloud. So that's scaling up, scaling down, the performance benefits, understanding scale Unix, the resilience, high availability instead of a disaster recovery model. We weren't taking advantage of those, and it's something that we need to do going forward. And just as we've said, you've got access to new technologies. These providers are starting to say, well, actually, we've got access to new business models. So instead of trying to deploy this all at once and manage it, or you manage it for yourself, it's more of this multi-tenanted cloud SaaS offering, which means you're getting closer to that Amazon one-click kind of environment where you sign up, there's the cloud, there's the SaaS. I configure my concept, what I want to be able to do within that platform, and I can start using it. It's funny, when we founded ClearBank, one of the options or one of the thought processes behind when we put banking as a service together was to create this cloud SaaS platform, which was delivering you agency banking services as well as banking as a service products for fintechs and credit unions, building societies, and other banks. So maybe we were a pioneer back then, because that journey started back in 2014, but it's 2015. But it's actually something we're starting to see more and more happen. But it's interesting. I'll be quiet in 2 seconds after I've said this. But it's interesting that I see SaaS as this curve that's come up. And as I said, in 2015, when we were looking at engineering ClearBank and what that proposition could look like, that was really the next option. You had infrastructure as a service. We had platform as a service that kind of Microsoft and Azure had pioneered. We had that platform kind of wording, but then we started getting to software as a service and the SaaS element. But for me, it's financial services are behind. Just as they're starting to embrace SaaS, we're starting to see new options coming within the cloud that aren't necessarily limiting you just to SaaS. And I can talk about that in a minute if we want to. But I'll be quiet and let somebody else talk for a moment.
No, it's good. I didn't know, Adrian, if you've got anything to add on that, I'm going to kind of move the conversation on slightly off the back of that, just to look at the options that are kind of available in the cloud and how you look to utilize the cloud and the solutions that are cloud-based. So I'll hand back to Andrew on that basis, and then perhaps you can throw in your 2 pennies worth as well after that.
Yeah, perfect. Makes sense, so, Adam. Crack on.
Yep. Yeah, Andrew, just wanted to look at kind of the options then when it comes to the cloud. In terms of how you look to utilize clouds and the solutions that ultimately are cloud-based. I'll come to you first, and then Adrian, it'd be good to get your thoughts afterwards.
Yeah, I mean, as a touch on there, I think the cloud is a mindset that you have infrastructure as a service, which is I want to spin up these virtual machines, these servers and stuff, and I want to utilize them, and I'll use them, and then get rid of them or use them how I see best fit. So that was, for me, was the start of cloud. I think Amazon were exceptionally good at that. They grew rapidly off the back of that. You had this platform concept, which is almost like putting your Windows operating system over that infrastructure to make it easier to control, to give you different options. So you kind of have that layer, if you like. And that really is platform as a service that Microsoft probably pioneered there, but everybody, the cloud providers, are starting to provide and give you platform as a service capabilities. It made complete sense that software providers would then look at this and say, actually, I can deliver this one application, this one tenant, and serve all of my customers. Why wouldn't I do that? Because I can scale up to meet the demand. So you've got those three offerings, and we've had those for quite a period of time. But I think actually in the last 12, 14 months, we've seen a rise of a bit more hybrid models, where part of it will be using infrastructure, part of it's using SaaS. And then we get these concepts of marketplaces that I think we're all becoming very familiar with. Well, what does a marketplace mean when you're looking at an infrastructure level? So if I give you an example, what we did with RTGS.global, the initial thought process, and I think everybody who, when we spoke to them about it, was saying, oh, you're going to provide a SaaS platform that we all connect to as an API, and that would deliver the connectivity or the network effect. But actually, that comes with a whole host of problems, because now I'm trying to scale up my SaaS offering based on 2 or 3 of the larger banks who are moving significant amounts of volume messages more than other banks. And you're kind of trying to scale this up to meet all of that demand. And there is still a natural understanding of scale units, right? You still will get areas of your system that you need to scale more heavily than others. So it becomes quite hard to understand what you're doing there. Then you've got other challenges of like, where's my data residency? With SaaS, you're trying to say, well, can I limit it for just this jurisdiction for you, but I still want to give the same platform to a different jurisdiction, and they're trying to actually deal with data residency in that jurisdiction. So what we've started to do is look at a lot more of a hybrid implementation, which is looking at managed applications or managed services. And these can be deployed as a component as part of your cloud provider. So with Microsoft Azure, you can use the marketplace or directly from the Azure portal. We're still in private preview at the moment, but actually, when we go general release, you can then simply say, I'm searching for not Azure SQL or not Event Grid, not a data lake, but I'm actually searching for the RTGS network connector, please. Bang, there it is as a component. You can install it directly from the portal into your own tenant, your own subscription within Azure. You'll configure that, you'll manage it within your own virtual networks. You take complete ownership and accountability of that. But yet it's actually almost like a SaaS offering that's dedicated to you in that particular area, because elements of the managed services, or the update cycle, if you like, or the maintenance cycle of that is not being managed by the bank. That's being managed by us and Microsoft as part of as a product offering, which is very much SaaS, but actually it's been deployed in a more infrastructure as a service model. So you have those managed services, and they give you a lot more benefits. Just to give you 2, the first one is obviously the security element. You now can say to your customer, you can secure this, including your data for users and everything else, in your own tenancy. So we don't need to know any of the users that log on to the platform or leverage it, because you're managing those and they're actually resident in your own infrastructure. So the RTGS.global platform never knows. In addition to that, we go back to scale. It means that actually if one bank wants to scale this massively more than another bank, then they can. They use more connectors and they scale those in a different way to maybe bank B. So that allows us to then say, actually, this is really easy to manage, because everyone's got the same network connector, but your implementation of it is very bespoke and very unique to yourself. The data that's resident in it is bespoke and unique to yourself. So we get this real hybrid and best of breed solution of SaaS as well as PaaS and infrastructure. And I think we're starting to see a lot more of this in other industries. Now, financial services is usually a bit behind the curve, shall we say. We're trying to bring this with RTGS.global, and I think people are starting to understand that actually that's a really unique and powerful implementation. I'll be interested to see how many banking core providers or other banks full stop look at ways of saying, well, actually, we should start distributing our system more. We should break it down. It's still a SaaS sort of concept, but we're breaking it down and distributing it and putting it into the hands of our customers to configure and use in their own tenancy. I'll be interested to see what happens with that in financial services in the next 24 months, and whether or not, again, this is something that we've kind of led the way with. Hopefully it is, because I personally think it's a much more powerful, secure, and fundamentally better implementation in the cloud than a pure SaaS offering.
No,
Sorry, also, I should also say that actually when you look at connectivity with that, it makes it a lot simpler, because you can go to partners like Equinix, getting a little plug in there, but you guys can directly connect from your operational centers into your peering locations for those particular cloud providers. Let's say it's a Microsoft Azure Express route, and then you're in security there. So you're now talking to everything 100% private across a whole cloud-based ecosystem. Nothing's going over the public internet, and you're driving it in your own private VNets, VLANs, virtual networks. Everything it's been run by yourself.
It's probably a nice segue to bring Adrian in, actually. I'm going to double down on some of the advantages, but some of the barriers to entry. But before I do that, Adrian, did you want to add anything to that point?
Yeah, I was just having massive job envy again, and then just to make it even worse, then Andrew then did my job and tell you to tell you how Equinix is helping those sort of data center banks connect to the cloud through our private fabric to access services like RTGS.global. So thank you, Andrew, for doing that. I guess, Andrew's talking there about using IaaS, PaaS, and SaaS in the cloud, and I guess that sounds absolutely fascinating. I'm really interested in that model that they've got there. I guess what we're seeing on the ground let's just go with the established businesses is this sort of journey that they're on through digital transformation that really has to encounter a hybrid multi-cloud model of cloud adoption. So, there's a spectrum here from established businesses to new businesses. New businesses, they start in the cloud and they come and talk to us when they're connecting in their ecosystem of partners, just as Andrew described there for RTGS.global, or they come to us when they're doing things like payments and they need physical infra in a data center, or they come and talk to us if they've got data sovereignty, like payments in India, for example. You can use the cloud, but you've got to bring the data back into India within 24 hours and things like that. So we get involved in those kind of areas too. But for the established businesses, they really are on a journey, and there are steps that they will take. That includes possibly moving out of their own data centers, which may be legacy, should we say, and move them into our data centers so that they are proximate to those cloud edges, so they get private low latency connections into the cloud and build hybrid environments, particularly useful, as I said, for payments processing, but also to access multi-cloud because they might want AI from Google, but IaaS from Azure, and PaaS from AWS. So that's really what we're seeing, is to make use of cloud for those established businesses and global businesses. It's really a step through of a journey. And to Andrew's point earlier, again, one of the things we also see is to realize the benefits of the cloud. You cannot just forklift an application that you've been running for some time and say it's cloud enabled and drop it into the cloud. You may not ever realize the benefit of the cloud if that application hasn't been re-architected into cloud native technology such as Kubernetes, so that it can sit there and take advantage of the scaling that's on offer. Because often what we're seeing is some of the early mistakes are you forklift applications into the cloud, but you never realize the benefits of the cost savings there, because the compute that you need to support that app is probably bigger than you thought. You can't do any scaling. And then if you didn't consider egress and data charges as well, things can get unstuck very quickly on your return on investment. So I guess what we're seeing is established businesses taking a lot of care of how they assess now what they're going to move to the cloud, and they start with the low-hanging fruit, which tends to be back office stuff, and then moves through into AI, and payments is a big use case we're seeing moving into the cloud. But to go back to the question on core banking still very, very early days, I think, before we see established businesses move through to move core banking into the cloud. I think more likely, and what we are seeing, is that it's getting modernized, but it comes into a data center like ours, maybe managed as a service rather than owned and operated, and then has cloud connectivity to take advantage of some of the tech the cloud can offer.
Great, thanks, Adrian. I'm going to stick with you if I can. Obviously, we've mentioned some of the advantages there when we look at scalability, speed to market, look at some of the cost-saving items that are there through banking in the cloud and utilizing those services. I wonder if we can double down then on some of the blockers or the barriers to market at the moment in terms of what's stopping organizations looking more seriously at the cloud and why they haven't to date. Adrian, as I said, I'll come back to you first, and then Andrew, you've got certainly some first-hand experience to deliver your thoughts as well.
I'm sure, as Andrew will confirm, there are no blockers, but there are things that you must be really careful of, right? So you must plan your way into the cloud very carefully. And if we take an established businesses, they'll do an assessment. They've probably got hundreds of apps. They need to look at responsiveness, resiliency, digital maturity, the business case for moving it, risk, security, and compliance. I had to write all that down. There's so much to consider, and you've got to look at everything that you're doing and pick workloads that you can then move to the cloud based on that kind of analysis. And like I said, they tend to, if an organization does that, they tend to pick on back office IT first, because it's the easier workloads to migrate. I was reading a CSA paper just yesterday, and it had done a survey of the financial services industry, and I think 90% of institutions now are using cloud, but the percentage of regulated workloads in the cloud is still very, very low, maybe 9 or 10%, right? And that's just showing you what I describe is that they're picking what's easy and moving that, and then the tougher stuff that they're waiting on, because the barriers to entry are things like, if you're an established business, your existing investment that you carry, the people, the processes, everything, the data centers that you have, it's not just as simple as switching on the cloud and off you go. I think security still an issue, right? If you're an established business, extending your security perimeter into the cloud does take some planning. I think we're way past the point where that was a barrier. I think if you go back, as Andrew said, clouds moved very fast. But if you went back 3 years, maybe 4, a lot of CIOs would have been concerned about cloud security. That's not the case now. But still, having to manage your security in the cloud is something new for an established business. Regulatory compliance, I think, is always a big issue. There's nothing stopping you. There's no blocker saying you can't get regulated workloads into the clouds. But clearly, it is more stringent. The further your hands are away from the control of the data, the more stringent those regulations become. And also, internal compliance is just as tough as regulatory compliance in many cases. Data privacy, we've established, is an area where there may be rules and regulations in place which dictate, again, not necessarily where you have to have your data, but again, it's probably easier in some cases if the data's on soil. If you move it off soil, it has to be encrypted, or it's harder to get the regulatory approval. There isn't a blocker there, but you do have to consider this. And India and payments is a great example of how businesses in payments and banking adapted their strategies to deal with regulation around data. Probably the biggest area to highlight for an established business is skills gap. Skills gap, we kind of gloss over it. We're talking about the technology, but it's also the people and the processes in an organization as well. Where you're getting your cloud expertise from, your information security experts, machine learning, AI expertise. These are not commodities. These are specialist areas now, and the supply of skills is limited. Containerization, Kubernetes, microservices, these are areas where organizations have said they have skills gaps. This opens the doors for the IBMs, the Accentures, the SIs, the managed service providers to step in and bridge those gaps. But there is an awful lot to consider if you're an established business who probably spends 80% of its IT budget on maintaining the status quo, which is the people, processes, and systems. It doesn't leave you a lot of room to start looking at new things and migrating workloads into the cloud. So those are the sort of big considerations that we see companies going through as they begin that kind of cloud journey.
Great, thanks, Adrian. And Andrew, I'm sure you agreed with a lot of what Adrian just mentioned there, and you've probably got some thoughts of your own. So I'll pass over to you now as well.
Yeah, it's just as I stole a bit of Adrian's thunder earlier there, he seems to have nailed everything, to be honest with you. So it's exactly what I've seen in the past 4 or 5 years. It's exactly that, right? I think the areas I would re-stress is that concept of the investment that you currently have just to keep the lights on. That's probably 80-90% of whatever funds you've got available to information technology or the underlying platforms that you use. Then you've probably got, let's face it, regulation and compliance probably gobbles up the rest of that, which leaves you with probably only 1, 2, 3% of your investment there to actually look at new technologies. if you're thinking of making the change to the cloud straight away, then you can't move everything. It's just too big. Therefore, you've got to try and break it down. So you then spend a lot of time trying to understand, actually, if I break that chunk off and try and put that into the cloud or deliver that in a different way, what does that actually mean? Because just as Adrian talked about, you've got people's process technology. You've also got the reintegration piece of work to make sure everything still works as you expected. There's a massive gap with understanding in terms of what I can and can't do with the cloud. I think that's not as bad as it was, but it's still a gap there, which means essentially you're almost disincentivized if you're a really successful traditional bank, because it's just such a hard piece of work to do. The only advice that we've ever seen really work is actually to spend a lot of time doubling down and looking at the areas you can break out. And what's really funny is when you look at things like mobile banking, most of the banks and stuff have already broken that out. It may not be in the cloud, but they've kind of broken that away. It's not sitting in its own core. It's kind of almost siloed, and therefore it needs to reconnect back in, but it's already siloed off, if that makes sense. So there is an opportunity there that I think that a lot of institutions overlook, which is to say those systems that are kind of siloed and they talk back in, not necessarily core banking, they could still be line of business sort of really important applications. Can they be moved into the cloud? And then if you can do that, you're going to start looking at your cloud strategy, which starts off with people, process, technology, understanding the regulations behind it, then understanding if you're going to re-engineer, whether you're going to redeploy. And off the back of that, you're probably then going to say, actually, it's probably safe for me then to not have this big bang moment like a la TSB or somebody. You've got to actually sit there and say, I'm going to have to run these systems side by side in parity. How do I do that? So there's a lot more complexities around the actual delivery and execution of that. And they're the big things I would call out, which means it's so much easier for a challenger bank that we've seen in the past 5 years turn up with this, whizzy application that people are like, oh my word, that scales easily. We're using the cloud, we're cloud native, X, Y, and Z, because you start with a blank sheet of paper and you've actually deployed into the cloud as you went. So no barriers to entry, lots of barriers to thinking, if that makes sense.
Yeah, it does. And I can see Adrian's nodding vigorously as well. So it's good that we're all in agreement there. I've got a few more questions that I want to cover off specifically to you both. This next question's going to come at Andrew and Adrian. I want you to have a think about, kind of as we close, I'm going to be asking both of you for your kind of 12-month prediction, and you'll get a 30-second shop window at the end to deliver those predictions. And then when we sit down in 12 months' time, we can hold you to those and see how you fared. So, Andrew, if I may, I was always asked never to ask a closed question, but I will do, and hope you'll elaborate, which I'm sure you will. Do you think everything a bank needs is available in the cloud?
I think it is, not necessarily all on one particular platform. I think everything is there. We talked about data residency. I think what you've got to be very, very mindful of, that I can say it's there, but it may only be there and made available in one specific cloud provider. So I remember when we started ClearBank, the data residency and the right to inspect for the FCA, that was a key important factor. We're going back a number of years here. So, but for us, that meant there was only one cloud provider who could provide us with the process and the technologies behind that to guarantee that if somebody wanted to inspect what we'd actually implemented, they could go to one of the Azure data centers and point at something and say, that's where our actual data is resident. You've got to be very considerate of what you've got with which cloud provider. It's not saying that it's not there, it just is, but you've got to make sure that you're using potentially the right services in the cloud as well. And that comes down to knowledge. There is a massive skills gap, especially in financial services, around this. And I think that is a real problem. And Adrian said it's a skills gap, but it's worse for financial services, because all of a sudden the people with the skills that I need don't want to come into financial services. If I'm a really smart data engineer in terms of AI and machine learning, there's far more sexy jobs out there than coming in and working in for a bank. So you're now competing with Facebook. You're competing with Google. You're competing with these technology providers that are out there now. So financial services need to be aware that it's no longer I'm competing against my other banks. I'm competing against technology companies. I'm competing against social media companies for that skills.
Great stuff. Thanks, Andrew. And Adrian, then, so Andrew, you can now go in and look at your 12-month prediction whilst I come to Adrian on this one. Adrian, I just want to touch on kind of running regulated workloads in the cloud. Maybe you could just brief us on some of the challenges there in terms of kind of EU outsourcing regulations, compliance, both internal and external, and then we'll look to close if that's okay.
Yeah, so just very quickly, as I said, the regulated workloads, that move to the clouds is slow, and the reasons for that are because of the compliance that you need internally and externally, and obviously that those are more difficult workloads to shift from an established infrastructure, a business that's running those already and picking them up and moving them. I think looking at the EU regulations, obviously UK's going to have its own, but there's nothing stopping you moving regulated workloads to the cloud. But it is clear to me that the further you outsource, the more hands that you pass the data to, the further away geographically you move your outsourcing, the harder it is to get compliance, I guess, is the steer I would take. And from talking to banks who are doing this, particularly when they're established and they have in-house capabilities that are on soil, you're looking at that going, I'm just making it harder for myself, even to get my internal approval, and then I've got to get the external compliance as well. I think ultimately, as I said, the cloud journey is inevitable. That this move to the easy button, this move to everything being available as a service is inevitable, and will even catch financial services eventually, and all of these workloads will move, just because, as Andrew says, the business model advantages, if you do it right, are there, and they are tangible and out there for everybody to realize, particularly as we move forward into platform-based models of business for everything, including financial services. Having a technology stack that allows you to roll things out into digital channels fast, agile, is going to be really, really important. So I think the regulated workloads will move. They carry more inertia, which is why they're moving slower.
Great, thanks, Adrian. That's really helpful. So let's look at the next 12 months ahead then, before we look to wrap up episode 1 of the Open Banking Expo TV for 2021. These will be going down in stone, gents. So Andrew, I'll be coming to you first. In your eyes, what are your predictions for the next 12 months for this industry? And then we'll get a date in the diary to see how they fared. Over to you.
I'm going to be cheeky there. I'm going to give you some for 12 months and some for 24, because I think the problem with financial services is that it moves so slow that it'll probably go into 24 months. I'm going to go with that. My 12-month prediction is that actually we're going to see more workloads going into the cloud from every single bank, every single financial service provider. They're going to start leveraging the cloud more and more. That means the cloud spend, or the committed spend to the cloud, will go up. I'm convinced of that completely. The next kind of thing in the next 12 months will be this ongoing demand for real time. Now, most banks have a number of challenges with what real time actually means, or their interpretation of that. So I think not just consumers, but businesses and banks themselves are starting to realize the benefits of real time, or just in time liquidity, or real time transactions, or things like that. So I think we're going to see an increased demand and expectation of that, which means we're going to see more investment in those sort of technologies, which is good, because obviously RTGS.global is a real-time liquidity provider network. So I can see actually more banks engaging with that. If I look a little bit longer than that down the road, I think we will just see that escalate up and up and up. And off the back of that, there'll be other concepts that start flourishing or doing better. If I think of just open banking itself, open banking's got a kind of like a slow curve, but I think it will move into that S as more services become available in the cloud and more understanding behind that. So in the next 24 months, I can see that starting to gather pace. But off the back of that, you end up with other concepts that we can't think of. We'll see more fintechs turning up, doing things with data, and a lot more things happening around the edge there. The one thing I will say is that I think this will all then boil back down to who owns data. and more importantly, who owns my personal data. I can see it, and I'm an advisor and help out on a number of areas around this subject itself. But I can see a lot of information being moved away from centralized systems and going into these decentralized kind of digital identity providers or self-sovereign identity. That actually probably won't do too much in the next 24 months, but I think we'll see more businesses outside of financial services really strongly embracing that, and then concepts of that coming into financial services as financial services catch up with the fact that this actually changes models quite significantly. It not only enriches the data that I actually get, so I can make better informed decisions because I get a fuller view of a particular customer, but it also means I get a fuller view without all the problems of their personalized data and all the risks that comes with that. Data used to be seen as a commodity, especially personalized data, but actually it's a liability now. So I think we see in financial services in the next 24 months, maybe beyond, there will be a far more embracing of that SSI digital identity kind of model. But as I said, I'm going 24 months out further on there. Yeah, just in case you have these actually in stone when I next talk to you in 12 months' time.
We will, and we should only afford Adrian that opportunity as well. So Adrian, happy, otherwise it will be unfair. So happy for you to give a 12 and 24 month outlook. You're up.
Yeah, I'm only going to talk about one thing, so I don't get into too much trouble for getting my predictions wrong. I think Andrew's a great bit. He might need 12 years and 24 years, not 12 months and 24 months. Yeah, I'm going to chicken it a little bit. What I'd say is Andrew's list is so complete actually as well. So the one element I think is kind of a little bit philosophical really, and is an ecosystem of partners. So if there's one thing clear to me, that we talked about this move to the easy button for financial services, it's also a move to partnering rather than building it yourself. And I think RTGS Global is a great example of this. The banks will be connecting to RTGS Global for cross-border transactions, right? The RTGS Global will become a key part of that ecosystem, and this is going to be joining cloud-based businesses to data-centered businesses. So this model of working where you're going to be partnering much more to take services, whether it's banking as a service, payments as a service, cross-border as a service. Particularly, I see this being attractive to tier 2 mid-sized banks who are looking at their budgets and what they've got to do. They're looking at about how to take advantage of the great technology and the capabilities in the cloud. Well, you take advantage of someone else who's taken advantage of it. And we're going to see, for fintechs to succeed, they need banks to be partnered with and to become customers, and the banks must open up to do that. And I think probably mid-sized banks are a great example of that, but also the tier ones are too. So I think we're going to see a ramp up in the partnerships that we see. This will continue to evolve and become a model for consuming services that we can put in front of customers like you and me on our phones, on really cool apps, open banking being part of that, of course. But I see that as becoming critically important for us all to succeed in this market. The banks must open up to partnerships. The fintechs must keep coming with these new ideas, and we must get really cool apps that give us financial well-being and all the things that we want on our phones. So I think next 12 to 24 months, let's monitor that, and we will see that each organization will have an ecosystem of partners connected privately through Equinix into the cloud, down to data center to cloud, cloud to cloud. All of this will evolve, and this will become a strategy for being successful in business by taking advantage of people who bring those capabilities to you over a simple API.
Great stuff. Thanks.
I should add one. I want to add one more.
Yep, go on. 30 seconds.
Because it's bit COVID related, but essentially I think what we're also going to see is more of a distributed workforce. Skills aren't going to be all where your operational center are in terms of financial services. You're going to start looking elsewhere. Yeah. So whether that be engineering skills or payments operations, whatever, and they're not necessarily going to have to come to your operational center, which means we might see more satellite offices. We'll see a lot more working from home. But I think gone are the days where financial institutions say, all our staff, you come here and we'll all work here and connect through this one connection. I think that means connectivity into the home and therefore back into your operational centers and back into the cloud. That's going to be something that really has to be solved and solved quickly in the next 12 months.
I completely agree. I think we're certainly all in agreement there. Gents, it's been a pleasure as always. So many thanks to Andrew, and maybe you need some time to get back to homeschooling today. So good luck with that. And many thanks, as well, Adrian. It's much appreciated. And also thanks to you who are viewing wherever you are globally across the world. Open Banking Expo TV. This is the first episode. Is available to stream directly from openbankingexpo.com via the on-demand section. And we look forward to welcoming you to episode 2. And we look forward to seeing you then. So many thanks and take care. Bye-bye for now.